friends, all the participants who are joining here. My dear friends, please accept our New Year wishes, good wishes for you and your family for the coming year 2025. In this year, this is the first webinar, and this webinar is on very hot topic on the issue of the search and seizures and its related assessment under the Income Tax Act. For this purpose, we have the best of the speakers that is available here, and all these speakers and moderator has done a lot of work on this part here. I hope that you will always get benefited of this knowledge of their knowledge, and it will be a good value additions to all of the learner like us here. With this, may I request CA Vijay Bhatt, who is the president of the Chamber of Tax Consultant, to speak few words about the chamber, and after that it can go to Richa ma'am here to brief for the brief introduction of the moderator, and after that the speaker can join into this part here. So over to Vijay Bhai, sir.
Thank you, Prakashji, and very warm welcome to each and everyone here. As Prakashji rightly mentioned, that today we are going to have this hot topic, which is very necessary in the cold climate of Delhi and surrounding. With my best wishes and sincere wishes for the year 2025, I welcome Senior Advocate Shri Tushar Hemani ji, CA Manoj Kumar ji, who is going to be moderator of the session. Our Delhi chapter convener Shri Prakash Sinha ji and teammate Richa ji, and everyone over here present to this wonderful learning evening today with the beginning of the new year. So far as Chamber of Tax Consultants activity, as Prakash ji mentioned, I would like to brief upon you that right now you are looking at me, my backdrop. Chamber of Tax Consultants welcomes you at 13th Residential Refresher course on GST. Yes, friends, I am at Bangalore, the IT Connect city of India, for 13th GST course, Residential Refresher course. And briefing about this, Chamber formed in 1926. We are in the 99th year of its existence, of spreading of knowledge and various activities. We have about 3,500 plus members in the form of advocates, chartered accountants, other tax practitioners. The purpose and aim of the chamber is to spread education in the field of taxation, direct tax, indirect tax, international tax, and so on. We have students committee doing a lot of activities for the students. Debate competition, essay competition. This month we are going to have GST moot court along with ILS Law College Pune, followed by another GST certification course. Friends, this certification course is open even for professionals as well as students. I encourage you to be part of that. Announcement will be soon released on our websites and emails and so on. This will be going for about 3 months every Saturday. So you can take this benefit because this is on hybrid mode based from Mumbai along with Government Law College. As Prakashji mentioned, next year we are going to have our centenary year, and in which we are going to have lot many educational programs with top faculties and all. So friends, looking forward from all of you, your great contribution and participation in the chamber activities. Those who are non-members, I invite them to be part of the chamber activity and take up membership through our Delhi chapter. Without taking much of the time between you and the speakers, I hand over the proceedings further to Richa ji. Over to Richa ji. Thank you all. Happy learning.
Just before Richa ma'am starts here, I would like to explain about some of the program that Delhi chapter is planning to do in the upcoming months here. The Delhi chapter is very much active here, and we do regular webinar here. And on this webinar, we discuss the important topics here. Last time we have discussed about the black money and the Benami Property Act issue, and where our speaker was Sridharan sir and Mr. Roy from the ex-CCIT here. This time we are discussing the important issue of the search and seizure here. Next, we are planning to do some seminar and hopefully webinar also on the budget, upcoming budget, because the budget may be coming on the 1st of February here. There are many other programs which are lined up here. May I request all the participants who are not joined the Chamber of Tax Consultant, please join the Chamber of Tax Consultant. Please be member of the Chamber of Tax Consultant. On a very few amount, you will be benefited with the good amount of the learning, with good amount of the updates, and with the regular mails, and you can participate in lot of discussion that we do here. It is only for the purpose of knowledge dissemination here, nothing else here. Thank you here. With this, may I hand over to Richa ma'am for the further proceeding. Thank you, President sir.
Good evening, everyone. Welcome everyone to the 2025 first webinar. We would like to welcome Mr. Manoj Kumar, who will be moderating this session. Mr. Manoj is the managing partner of Manoj Kumar Mittal and Company, with over 25 years of experience in direct and international taxation. A seasoned tax professional, he has successfully represented domestic and international clients in litigation matters, achieving a 98% success rate before appellate authorities, including ITAT. He's a member of ICI Direct Tax Committee, IFA, Bombay Chartered Accountants Society, and CTC. He has contributed to drafting key professional publications, including the Guidance Note on Tax Audit and Frameworks for Non-Corporate Financial Statements. An accomplished speaker, author, his insights are regularly featured in esteemed journals like Taxman and Tax Sutra, etc. He specializes in tax advisory, litigation, and compliance with notable expertise in handling landmark cases and complex international tax issues. Welcome, sir. I request you to please take this session forward. Thank you very much.
Yeah, for your kind words. And thanks CTC to provide me an opportunity to moderate the session on the subject which is very close to my heart. It is said that death and litigations are certain in this world. And we have been seeing these ages that tax litigation are going on and recently has jumped up like anything. For such and seizures, for past 30 years, we have seen many phases of such assessments. Before, till mid of 1995, there was no separate assessment process. It was like 148 process. 1995 to 2003, we have a block assessments. 2003 to 2021, we have separate assessment process 153A and C. 2021 to 2024, we have go back to pre-1995 regions 148, and then we are again back to block assessments. Now in the block assessments, now earlier we have done a concept of undisclosed income, now we are going for total income. And there are certain new things, prior approvals, and replacing the word false by incorrect in undisclosed income. So, and whether we are going to see again the long litigation based on incriminating materials and seeing the judgment of Abhisa Bidwell, Kabut Chawla, Jagdish Singh, and Siddhant Singhbad Educational Trust. For all, we have an esteemed speaker, Tushar Hemani ji. He is a senior advocate practicing in the field of direct and indirect taxations, corporate, commercial, and physical law before the Honorable Supreme Court, High Court, tribunals, commissions, and other judicial authorities. He is one of the youngest at bar to have been conferred senior designation by the Gujarat High Court in the year 2019. He is a vice chairman of All India Federation of Tax Practitioners, or ITT Bar Association Coordination Committee for the term 2023. He is a president of Income Tax Appellate Tribunal Bar Association, Ahmedabad, for the term 2015 to 2017. Member of Direct Tax Committee of Gujarat Chamber of Commerce and Industry. He is a member of Legal Committee of All Gujarat Federation of Tax Consultant and Legal Committee of Income Tax Bar Association. He is nominated as a subgroup member of Direct Tax Committee of WIRC for the year 2018-19. A regular speaker at various conferences, seminars, and meetings of varied professional bodies on diverse issues in the field of taxation and corporate law. A regular writer of columns, articles, and papers for professional journals and conferences. Visiting faculty at various institutes, universities, colleges, management, and law schools on the subject of taxation and corporate law. Over to sir. Over to Tusharji.
Thank you, sir, for the kind introduction. Good evening, friends. Today's topic, the new block assessment scheme, is a very interesting topic. And the way I see it, I personally believe that this will have probably double the litigation that we saw during the erstwhile block era as well as 153 era. The reason I'm saying this is because this is nothing but amalgam of the block scheme and 153 ABC scheme. So government has mixed up both this and came out with a block. That block is again going to be a stumbling block in collection of revenue, because I can foresee huge litigation coming in our way, the way in which the section is drafted as of today, the way in which the sections are lined up. There is bound to be some confusion. Maybe in the next budget, we will see some amendments ironing out certain obvious errors in drafting the sections, etc. That said, what we plan to do is for the next 1 hour, I'll be covering the entire scheme of the act for the block assessment scheme, and thereafter we can open the house for question answers. I understand Manoj Bhai has just now shared some questions with me. We can share those questions on the screen and discuss them one by one, and that if need be, we can invite more questions as well. With this, friends, let us, what I plan to do is I have prepared a small Word file, which I can share on the screen. My sharing is enabled, so I would share the file. It's visible?
No, sir, it is not.
Yes,
Yes, sir, it is
sir.
visible.
Yes, sir. It's visible.
Okay. All right. This is maybe in a slightly, I could have prepared the slides, but then I was busy in the courtroom. I can share the Word file, and if need be, we can share this rough draft, etc., amongst the members as well. But nothing really turns on this, so pay close attention rather than looking on the screen. Look, the search assessment has always been a contentious issue, because unlike a normal assessment where what is being scrutinized is your return of income, here is an assessment which determines your income based on the search which has taken place. All of us are aware that search is an extreme step whereby the department visits your office, your residential premises, and frankly breaks into all sorts of privacy that you have created for yourself. And as a citizen, you certainly love to enjoy the privacy which the Constitution guarantees. In fact, with that in mind, it will not be out of place here to refer to one recent judgment. In fact, that has changed the search before the court of law. All of us are aware that in the past, whenever the SSCs have tried to challenge the search proceedings, courts were not very receptive in as much as such a challenge was always turned down by the court on the ground that ultimately what we have to look at is that is there any reason to believe for the purpose of carrying out of the search? And the moment there is a presence of reason to believe, that the moment there are grounds which would support the formation of such a belief, the court would not go into the sufficiency of those beliefs. Court would only say that, sir, we find that there is some material which is available, and some material is bound to be there in that investigative file, which is a closely guarded secret, and only be shown to the court and not to the SSC. And therefore, the searches would fail. The second reason was that whenever you try to challenge a search, the courts, even if court upholds that search was not a legal search, it was an illegal search, the law was well settled, Puranmal's judgment, that any material which is found out from an illegal search also can be used for the purpose of framing the assessment. Now, the recent judgment 468 ITR 37 Madras has, in fact, very beautifully discussed the whole law on the issue. And they figured out, in fact, they have distinguished illegality versus unconstitutionality of the search. They distinguish between the two. They say that an illegal search, yes, material can be used for the purpose of framing the assessment. However, if a search is unconstitutional, then probably you can't use any material which you unearth in that unconstitutional search. They say that because of the judgment of Puttaswamy, privacy has become a fundamental right, though not very categorically there in the Constitution. However, the Constitution bench of the Supreme Court has laid down that privacy is a fundamental right. And any violation of that privacy, the proper procedure has to be followed. If you do not follow the proper procedure, then that right is violated in as much as your privacy right is violated. And that is in violation of Article 21, read with 265 of the Constitution. Once there is a violation to your fundamental rights, then the search becomes an unconstitutional one. And therefore, any material which is collected in that search cannot be used for the purpose of any subsequent assessment. In the facts of that case, Madras High Court, there were all kinds of illegalities, which we, in fact, as a tax professional, we come across day in and day out. And those are the illegalities which are committed by department almost in all searches. That CCTV cameras were turned off, people were not allowed to leave the premise despite there being a medical emergency, other family members' phone, etc. were taken away without their permission, so on and so forth. All these are the normal procedure, and therefore, my humble view is that this judgment has opened a huge litigation door for the purpose of challenging unconstitutional searches. And if we succeed in that, probably we'll not have to see the block assessment as such. That said, let us come to the block assessment. I have given on the screen that these are the various stages. Those who are in the practice prior to 2003, they are all familiar with the old block assessment scheme. And let me at this stage only point out that old block assessment scheme, if that was, I would not dare to say that it's an old wine in a new bottle. I would say old was a single malt. Now it is in a double malt or a mixed whiskey that the revenue is serving. The various stages earlier, prior to 1995, the reopening notices would be issued for each of the year. After 1995, there was a consolidated block period of 10 years, which was again reduced to 6 years in 2001. And thereafter, 2003 law has undergone a change. In fact, if you read the finance bill, when 153 ABC was introduced, you would find precisely the same reasons which are given in 2024's finance bill, wherein the reasons are identical. When the government introduced 153 ABC scheme, they say that this is for the purpose of efficiency, in organized manner, they want to frame the assessment, etc. And the earlier block assessment scheme is not giving the results, and it is prone to huge litigation. Once again, it comes fast forward to 24, and we see the same kind of reasoning that 153 ABC is prone to litigation. We have seen large number of problems, administrative problems in framing assessment, different assessment for 6 years, and therefore we are going back to the block assessment scheme. In between, from 2021 to 2024, government again came out with a reopening scheme. They tried to put the block assessment also in the reassessment regime, and that created, in fact, more problems. That was a classic, those 3 years were a classic example where the one mistake on the part of the parliament and the whole thing was jumbled up, and we saw a huge litigation taking place. That litigation is still pending before various courts. And therefore, once again, government thought that let us go back to the old block assessment scheme. However, because we did not succeed in 153 ABC scheme, this time around, we will mix up both of them. So what now they have done is they picked up certain traits from block assessment scheme. They picked up certain features of 153 ABC. And ultimately, they say that now we'll have a hybrid block, which is nothing but amalgamation of both the earlier schemes. That said, let us look at the basic scheme of the Act. We start with 158B, the definition. What I would do is, look, under the old block assessment scheme, the jurisprudence was well settled. We had a large number of judgments wherein various facets of block assessment scheme were settled by the court. I'll make a reference to some of them. I'll leave open most of them. What I'll do is I'll concentrate more on the deviation from the earlier scheme so as to understand and make sense out of what is it that is weighing with the parliament so as to enact this new block assessment scheme. if you compare both of this, the old as well as the new, old is on the left side of my screen, new is on the right side of the screen. I've written old and new as well. The first difference that you notice, I have highlighted those again, the differences in red bold letters as well, is earlier the block was to be counted from the day on which the searches are conducted, and conducted is always in the past tense. In other words, when the searches are completed, that will be create a block. The block period was consisting of a period of 6 years immediately preceding the year in which search was conducted. In other words, search was concluded in the year, and then you go back 6 years for the purpose of counting the block assessment, the block period. As against that, here what we find is that block period, it commences the day on which search is initiated under section 132. And what would be the implication? I'll point out when we go to 158 BC and the notice, etc. I'll point out that this initiation vis-a-vis conducted is what kind of problem it is going to create for us. Insofar as the definition of undisclosed income is concerned, you would find that undisclosed income now includes both the undisclosed income per se, namely money, bullion, jewelry, or other valuable article or things, as well as the disclosed part of it, namely, if at all, anything which is coming out from reading of your profit and loss account or your balance sheet, etc., wherein any expenses, exemption, deduction, or allowance, which is claimed by you and not found to be correct in respect of such block period. So now, not found to be incorrect in such block period. You would find earlier the language was false. All this was part of the earlier block scheme also. But then earlier, what the law said earlier was that if at all we find that, sir, for the entire block period of 6 years, you have claimed certain expenses which are false in nature, which are bogus expenditure. Basically, false has a connotation of some obvious act on the part of the SSA, the conscious act on the part of the SSA in misrepresenting, or a fraudulent transaction is as much as that SSA himself has done something wrong willingly or by its own volition. Whereas incorrect is again an innocent word. It also includes the errors which are committed or a claim which is otherwise has not reached to a finality, which may be judicially not yet settled. Even those claims also can be termed as an incorrect claim because ultimately it has not attained finality. So as against the false claims, which was admittedly a false one, now even the incorrect claims are also included within the definition of undisclosed income. If you want to find out the distinction between the two, you can refer to explanation 1 to section 271(1)(c), wherein almost under identical circumstances, various courts have taken views as to what is false, because explanation 1 in respect of 271(1)(c, you would find that it refers to a situation where the explanation given by the SSC is found to be false as against the furnishing of inaccurate particulars of income, etc. So there courts have time and again analyzed this, interpreted this, the distinction between false and incorrect claim is well explained. However, what I'm seeing today is incorrect is a very wide term. And it also includes certain claims which have yet not attained finality. And therefore, even those expenses, those deductions, those allowances, which are according to the revenue incorrect, are also going to be included in the definition of undisclosed income. Rest of the section is not at all something which is to be discussed. What I again discuss is the definition of block period, because this is something which is very interesting, and I have given an example, live example. First, let me read out what is the definition of a block period under the new scheme. Block period means the period comprising previous years relevant to 6 assessment year preceding the previous year in which the search was initiated under section 132 or any requisition was made of April of the previous year in which search was initiated or requisition was made, and ending on the date of execution of the last of the authorization for such search or other requisition. In other words, what is included in the block period is you start with the previous year in which search is initiated. you go back 6 years preceding that previous year in which search is initiated. In the year in which search is initiated, you start from 1st April and you stop the day on stop the day on which the search is concluded. That period is
15 मैम 14-15 में भी जो ग्राउंड है वो मत लीजिए वो वाला.
Hello.
कौन सा ग्राउंड सर?
Just hold on, sir.
yeah.
Ruchesh, sir, your mic is unmute.
I'm sorry.
Please continue.
Yes. So what we are seeing is that first part is 6 years, which are all the entire complete 6 years prior to the previous year in which search is initiated, and the search year from 1st April till the last of the authorization, namely the conclusion of the search, we include it as a part of block period. So block is 6 plus something, 6 plus the day on which search is concluded. You count from 1st April till the date of conclusion of the search. However, this can create a problem in a given example. Take an example, read the red part on the screen. Take an example where a search is commences on 25th March 2025. So the commencement of the search 25, we go back, this is previous year 24-25, we go back 6 years from 24-25, no dispute, 6 years are computed. Then the last of the authorization executed on 25th April 2025. Therefore, the last authorization is 25th day of April 2025. We are 25 days into that period. However, again, earlier block period would have begun on 1st April 2024 and would have ended on March 25, because ultimately the earlier block period was 6 years plus the date on which the search is concluded. Simple. However, now we have a new problem, because new problem is the law says that we'll have to deal all this in a different manner. So what we have to do is we have to now compute that the full 6 years going back from financial year 24-25, part of the next because search commences on 25th March 2025. Therefore, from 1st April 24 to 25th March 25 is one period. And that period again is a separate period, because search is now getting concluded on 1st April 2025. So we are also moving into the next year. So the block period would be 6 complete years. Then 7th year from 1st April to 25th March. Again, we'll have to go into the next year up to 25th of April 2025. So that period again would be treated as a block period. So this is again going to create a problem, because the commencement date and the conclusion date both have a different connotations. I think legislature, parliament would have been better off had they stuck to only one of the dates, namely, and it is always advisable to stick to the concluding date, because commencement date has no significance. I'll also explain while we go to 158 BC that what kind of further problems it is going to create. But this is what the law is, and we'll have to live by this. There is one more explanation which is appended below the section 158B. And that explanation is, for the purpose of this chapter, the last of the authorization, because that is the date, last authorization is the date on which authorization date. What is the meaning? The meaning is explained that in case of a search, on the conclusion of search as recorded in the last Panchanama drawn in relation to any person in whose case the warrant of authorization has been issued. So in simple words, when the last Panchanama is drawn when the search party is leaving the search premises. When the last Panchanama is drawn, the search can be said to have completed, and therefore that is the date on which the entire mechanism of block assessment in a given case would commence. However, what is the last Panchanama? Now, last Panchanama, again, under the earlier regime, the controversy was raging to the effect that, sir, what do we mean by last Panchanama? Last Panchanama is, do we go by the literal Panchanama or the effective Panchanama? Because literal Panchanama is the day on which anybody signs the Panchanama and anybody notes it. It is known as the literal Panchanama. However, the effective Panchanama is something which is a different concept. You would find the judgments. I have cited 3-4 judgments on the issue. First three judgments, Karnataka, Kerala, and Bombay are in favor. In later two judgments, Supreme Court has reiterated a law. However, they have not frankly dealt with the actual aspect of what is the difference between a literal Panchanama and an effective Panchanama. I'll give you an example. What is the difference between the two? When a search party comes to my premise, they come on a 25th March. They know pretty well that if they conclude the search before 31st of March, a different connotation would follow, a different limitation would follow. If they extend the search and go into the month of April, they will, in a given case, get a larger limitation period for the purpose of claiming the assessment, etc. So what they do is they come and visit my bedroom. Despite visiting my bedroom, they say that, sir, right now we are going home. We do not have the manpower to look into your bedroom. Therefore, we'll put something known as prohibitory order, 132 subsection 3. It's known as PO. So prohibitory order. We will seal that room with a notice to the SSC that, sir, kindly do not enter this room without our presence. Or in a given case, they might put the seal in any of the cupboards or in any of the lockers which the SSC has. Anywhere, anything which can be identified and sealed, they put a prohibitory order. Now, prohibitory order, they are in place, they go back, they come after a week's time, 10 days time, 15 days time, sometime in the middle of April, they come back to my premise, they open the bedroom, despite knowing fully well that there is nothing incriminating is there in the bedroom, because bedroom does not even admittedly have a single cupboard, leave alone any material, except for the bed, there is nothing there, and bed, one can just kneel down and see what is there beneath the bed or beneath the pillow, etc. But then they do not do this. They simply, in order to extend the search, they put a prohibitory order, they come, they open the prohibitory order, draw a Panchanama, and they say that, sir, we do not find anything, therefore the search is now concluded. So automatically search is extended. So there is the concept that what is a literal Panchanama and an effective Panchanama. So courts have interpreted that effective Panchanama is a case where something is unearthed in the later part of the search, when the search is resumed after a temporary halt. That is known as the effective Panchanama. However, if it's only for the purpose of buying time, if the prohibitory order is put in place, then that is only a literal Panchanama. And based on this, even the last date under 158 BE would be decided under the erstwhile regime, now as per the explanation. Therefore, this controversy again is going to be there alive, that what is going to be the meaning of last Panchanama. Can we put words to this and can we effectively interpret so as to mean the effective last Panchanama? So this is something times will tell us that what is going to be the fate of all these judgments. Would take me to the next section 158 BA. This is a section which points out what is the assessment of total income as a result of search. Here, the language is more or less the same, that based on the seized material, etc., they will try to assess or reassess. Here, the word reassess appears in the new scheme, whereas under the old scheme, it was only the assess word was there. Probably here it is there because it's a scheme whereby the pending reassessment also in a given case can abate, and if that abated year is added to the block period, then probably it is a reassessment, and therefore the statute probably would have placed the word reassess also. However, there is one more angle to this also. Under the old block assessment scheme, Gujarat High Court in Cargo Agency and other high courts have taken a view that once a block assessment is framed, it cannot be reopened because the law does not permit reopening of a block assessment per se. Now, in the changed circumstances, probably that judgment will have a less effect because here is a case where even the abatement also takes place and even the regular assessment is also there along with the block assessment, and therefore they cannot reopen the block of 6 years. They can certainly reopen individual years of the block, and therefore probably that controversy may or may not be there. However, in order to take care of such a situation, they probably placed a word assess or reassess so as to draw power from this. But I am very clear in my mind that 158 BA is only going to be pressed into service post search. It cannot be that I reopen a block assessment under the block assessment scheme. I cannot do that. But my reading is that because there is abatement and the abated year could be 147, therefore they say that assess or reassess. The second part, subsection 2, talks about the abatement, which I just mentioned. It's analogous to second proviso to 153A, where they say that on the date of search. Here also again, if what they say is that all the years which are pending on the date of initiation of search. Kindly mark, everywhere it is not the conclusion, it is the initiation. Therefore, a date is slightly earlier. Whenever the search is initiated, if any year is pending, all those years, if they are falling within search minus 6 years bracket, then all those years shall abate and they will be merged with the search block assessment which is going to take place. If nothing is pending, nothing abates, and therefore the only years which get abated probably would be the year for which the assessment etc. is yet to be become time barred. Subsection 3 talks about abatement of TP assessments. Nothing really turns on that. Subsection 4 says that in case if this is a second search at the premise of the same SSC, then the earlier search assessment needs to get framed first, and therefore we'll have to wait till the first assessment of the first search is framed, and thereafter we'll take up the second assessment. That is for the second search, the first block assessment will take place thereafter. In the process, if there is any limitation issue, then they will get 3 months time to frame, if at all limitation becomes 0. Then subsection 5 is that in the appeal, if the block assessment is cost, or if it is set aside, or for any matter the appeal of the SSC is allowed, then all those assessments which have abated would get revived. This is again analogous to 153A2 of the erstwhile scheme. Subsection 6 says that up to the date of search initiation and conclusion, the 6 years plus in the year of search from 1st April till the search is concluded, that period will go in block. However, for the remaining period, supposing search is concluded on 6th of June, then from 7th of June till 31st March of that year will go in a normal assessment scheme, and that is subsection 6 says that remaining part, the normal assessment will take place. Subsection 7 says that the taxes would be levied at the rate of 60% plus surcharge, if any. There is no surcharge which is prescribed as of now in the Finance Bill 2024, Finance number 2 Bill 2024. Therefore, at the moment, it is 60% of the rate of taxation which is prescribed under section 113 of the Act. So what is the difference? The major difference I have highlighted is subsection 3 of the erstwhile scheme, namely 158BA of the old block assessment, wherein there was subsection 3. Subsection 3 under the old block scheme was in a way giving a protection to the SSC. What was the subsection? Subsection says that where the SSC proves to the satisfaction of the assessing officer that any part of the income referred to in subsection 1 relates to an assessment for which previous year has not ended. The first possibility, which is the previous year has yet not ended. Second possibility, or the due date of filing of return has yet not been over. Therefore, previous year is over. However, by return date is, filing date is supposing 30th of September or 31st October, then that date is yet not there, and therefore I was under no obligation to file my return, though my previous year was over. Or during the previous year, if the search takes place on 1st of January, then the previous year is yet not over, and therefore there was no obligation to file any return of income. In such a scenario, the law says that if I can satisfy the AO that books of accounts or other documents maintained in the normal course recorded all the transactions which are there for that period or for that year, then though that will not be treated as my income for the block period, it will not be treated as an undisclosed income. However, under the new scheme, previous year not ended situation is covered by 158BB1 item small Roman 4. I'll take you there. 158BB14, where previous year not over situation is already covered. However, due date for filing of return not expired situation is not there. In fact, in the entire new scheme, this situation is something which is in dark, which is not at all specified. And therefore, can we take an advantage of that situation? In a moment, I'll make a reference to that. But please remember that there are two situations. One, during the previous search takes place. it's already contemplated by Parliament and there is a remedy which is provided. Year is over. However, due date for filing of return of income is not there. And before that search takes place, then what to do? We will discuss in a short while from now. That would take me to 158BB. Computation of the total income of the block period. Now, this is something where probably I see a lot of litigation taking place. This is a section which is heart of the block assessment scheme, that how to compute the income. Unlike old scheme, probably there is a major deviation. Therefore, we'll try to understand the new scheme, and from reading the words of the old scheme, we try to find out why such a deviation from the old scheme. But nonetheless, we first need to understand what is the scheme of block assessment under 158BB. 158BB subsection 1 says that we start with the computation of income, and that first computation is, the first part is your return of income under 158BC. Whatever income that you disclose in that return would be the beginning point. The second item is small Roman 2 says that any assessment which has taken place prior to the date of initiation of search, all those assessed income would be added over here. Third part is total income declared in the return of income filed under 139 or response to a notice under so-and-so or 148 not covered under clause 1 or 2. So where which is not covered under the income which is not forming part of BC because it is already forming part of some other return, or it is not assessed, all those will come under clause 3. However, here they do not say prior to the date of initiation of search. Here they say that total income declared in the return of income under 139, unlike the earlier part where they say that all assessments framed prior to the initiation of the search. There is no reference to search here. So in a given case, supposing someone say that, sir, if the search is taking place on 5th of September, and my return due date is 31st October. I have not filed the return of income. I admittedly file the return after the search takes place because my due date is falling thereafter. And by that time, obviously, you have suffered the search, so you become wiser and you would like to, revise your return in as much as you would like to offer something honestly, compulsory honesty. But nonetheless, you would like to file some return of income after the search date. Is there any prohibition? The answer appears to be negative because that is not something which is contemplated over here. What they say is, they say that reference is only to 139. They don't even say that 139.1 or 139.4. Therefore, we can even expand the scope to include even 139.4 returns because there is no such distinction over here. What they say is total income declared in the return of income filed under 139. So whatever return that you file under 139, pre or post search, again not specified. You can always put it over here. And that is the reason when I said that second eventuality, that due date of filing of return is yet not over, is not contemplated because probably the scheme appears to be that any return that you file and whatever income that you disclose is added under subsection 1 and thereafter it is removed under subsection 5. We will see in a short while from now. So here it appears to be a doubtful situation that even if I file the return of income post search, and it could be a belated return as well, or it could be a revised return also, because even subsection 5 is not mentioned. Can I do it? I don't know, because this is a gray area, and probably the way in which the section is framed, one can try and file the return of income even after the search is over. Because 270(1)(1)(c), where such a situation is contemplated, anything that you file after the search is specifically excluded. 270(A), again, this situation is contemplated, specifically excluded from the purview, and therefore those sections are not applicable. There was a presumption that whatever return that you file after the search, the presumption would be everything is undisclosed. Everything would not have been disclosed to the department, but for the search. There is no such presumption which is operating against the SSE here, and therefore this appears to be a gray area. Again, let us move forward. Item 4, I made a reference to this item, that whenever total income determined when the previous year has not ended on the basis of the entries relating to such income, one can always justify that this is something which is where the entries are there, and therefore there is no reason for me not to disclose this, and therefore I was about to file the return of income. However, the due date is not there, or my previous year itself is not yet over. Therefore, there is no question of then filing the return of income. However, this again would remind me of the controversy under the old block scheme, where the salaried employee, many a times they do not file the return of income, thinking that they're already under 192, entire tax is deducted, and therefore their entire income is already taxed, and therefore there is no need for them to file the return of income. However, if that is not so, can they now still be exposed to 60% tax on that salary income, except for salary? For the purpose of understanding the concept, there is no other income, and because of the operation of 192, etc., entire income is fully taxed. Already TDS certificates are uploaded. However, there is no return of income filed, and if there is no return, it will be treated as a undisclosed income. Can it be taxed at 60%? Again, we have judgments under the old scheme. Probably we can press into service those judgments and try to get away from 60% tax rate. But then, be that as it may, entries relating to such income or transactions, if they are recorded into the books of accounts, we can get away if the search is during the previous year itself. And item 5 is whatever is the final income which is decided by assessing officer to be your undisclosed income, that income is also accumulated under subsection 1. So subsection 1, what it does is it accumulates all the income from all the sources and make a larger sum. And thereafter, what is deducted out of this is explained in the later sections. Subsection 2 says that this is interesting. The undisclosed income falling within the block period forming part of the total income referred to in subsection 1 shall be computed in accordance with the provisions of this act on the basis of evidence is found as a result of search or survey or requisition of books of accounts and other documents and any other material or information as are either available with the assessing officer or come to his notice during the course of the proceedings under this chapter. Now, anything which comes to his notice can be used against you as against the language under the old scheme wherein relatable to such evidences. Earlier, under the old scheme, you would find that the word used is relatable to such. I have highlighted under the old part on the left hand side, such other material or information as are available with the assessing officer and relatable to such evidence. So evidence is found out during the search and any material, any information which is later on acquired relatable to that evidence can always be used by the AO. Whereas here under the new scheme, any other material or information, even if it is not relatable to seized material, can be pressed into service for the purpose of making this addition. For the reason that this is, according to the Parliament, is an amalgam of both the block assessment for finding out the undisclosed income as well as a regular assessment for finding out the regular income. And therefore, probably that relatable to those evidences, namely the seized material, is missing. Subsection 3 is for TP. TP, even if it is for the part of the year of the search year, TP material is found out, that material is not to be used for the purpose of framing a assessment of undisclosed income. That material for the TP assessment would be used under the normal provisions of the law. Subsection 4, again, it says it's more or less identical to earlier part also, that in case of a firm, unless you are a working partner, the remuneration would not be reduced. Section 68, 69, etc. For that purpose, the block assessment would replace the financial year which is mentioned in those sections, and the TP period, etc., the previous year mentioned should be read as a block period. So this is nothing but a procedural thing. Subsection 5 says that what is it that is required to be reduced from the gross income which is computed under 1, subsection 1. What is it that is required to be reduced? For the purpose of subsection 7, that 7 is 60% rate at 113 under section 113. That 60% rate would be levied on what? That is, would be charged in a manner specified in subsection 1 as reduced by the total income referred to in clause 2, 3 and 4. So 2, 3 and 4 would be reduced. Now, let's look at 2, 3 and 4 once again. 2 is assessed income, 3 is a returned income, and 4 is the income which is decided based on the entries that broken previous year. based on the entry, etc., the amount which you try to justify as not undisclosed, that is required to be reduced. So your SS income will go out, your return income will go out, and the total income, which is determined for the broken previous year, goes out of this computation. So for the purpose of computing, on one hand, the parliament is adding them. On another hand, they are trying to remove those income so as to nullify its effect and ultimately bring to tax only the income which is otherwise unearthed or part of the block assessment exercise at the rate of 60%. So this income again is going to be removed from the purview of section 115BB. We go to subsection 6. 6 says that losses you ignore for the purpose of block income and you can carry it forward and immediately set off after the block period. There are two kinds of losses. One, you have a loss at the beginning of the block period. We all know that law is very simple. What you do is you freeze those losses and unobserved depreciation at the beginning of the block period. You keep it frozen for the time being for the entire duration of the block period. Once the block period is over, it gets unfreezed and you can take a set off of those losses which were earlier available. Limitation, etc. is taken care of. The second is, in the 6 years of block period, supposing you suffer a loss in any of the year, the law says that you can't set off that loss against the positive income for the block period, and therefore that loss is to be ignored. However, that ignored loss, whether it goes down the drain or can you opt to pass that set off that loss at the end of the block period by carrying that loss forward, because there is no express prohibition that this loss is required to be nullified. It says that loss you ignore for the purpose of computing the block income, namely the undisclosed income. Yes, we ignore it. However, the loss does not disappear. If it does not disappear, then it is carried forward. If it is carried forward, it is always available post the block period for set off against the regular income, even for the broken period, which is again part of the regular assessment, immediately after the search is concluded. So whether that is there or no, again, we'll have to wait for the court judgment. And 7, I've already explained that loss, etc. at the beginning will get carried over to the end of the block period. So this is insofar as 115BB is concerned, namely the computation of the block period. Now let us look at the old scheme and try to find out, is there any deviation? I have already discussed this relatable to such evidences. Look, clause C is interesting. Clause C, when they say that when you determine the block income, what you do is where the due date of filing of return of income has expired, but no return has been filed, then there are exceptions to this, that return is not filed because of, you can justify based on the entries, etc. and try to justify that you had every intention to disclose this income before the revenue authorities. However, for some error, it is not so. And the due date of filing of return has expired, but return has not been filed, then in such a cases, it is required to be treated as a nil as per CA. Both these clauses, as I have indicated earlier, that there is no such provision under the new scheme, and therefore, in what manner the absence of these clauses is going to be interpreted, my interpretation is that 139, you can even file the returns which are already due for filing, or where post-search also the returns, if the law permits, you can file those returns under 139, depending upon the portal permitting you to upload those returns and the due date permits. Subsection 3 is interesting. Subsection 3 of the old scheme says that the burden of proving to the satisfaction of assessing officer that any undisclosed income has already been disclosed in return of income filed by the SSE before the commencement of the search or the requisition, as the case may be, shall be on the SSE. Now, there is no such provision under the new scheme. Can I claim that, sir, now, because under the old scheme, there was an explicit burden on me. Now that explicit burden is not there. Therefore, I'll take advantage of the situation and I'll say that, sir, now the burden is shifted. Now you'll have to prove that what is undisclosed is something which I never intended to disclose. Now that appears to be far-fetched. Probably the revenue will try to put everything, whatever is not properly disclosed in the return of income, as by treating it as an undisclosed income. And if they do it, the burden is always on the SSE to then disprove that whatever is treated as undisclosed was always intended to be disclosed by virtue of ABC evidences. That would take me to the next 158 BC. Look, notice under the old scheme was 15 to 45 days, but that was post the search. The old language was where the search has been conducted in a past sense, that search is conducted, namely search is over. Now, the law now says that where any search has been initiated and upon initiation of the search, he will issue the notice. Supposing if he does that, then your period of maximum 60 days will start from the date of initiation of the search. Supposing search lasts for 30 days or 25 days, 15 days, then out of your 60 days period, that period is going to be taken up. And therefore, I said earlier when I opened that initiation is something which is in law also, it has no significance whatsoever. Therefore, it is the conclusion of the search which must trigger 158 BC and not the initiation. I believe that wisdom would prevail and the officer would see to it that it is always after the search is concluded that they issue the BC notice and not when the search is initiated. Immediately on the next day, they'll issue the notice and my 60 days meter will start running from that day because the section says so. That the second part B of BC is assessing officer shall proceed to determine the total income, including the undisclosed income for the block period. Earlier, it was only disclosed income. Now we know that the block is a hybrid block, wherein both this undisclosed and disclosed income is going to be worked out together. And therefore, obviously, the word undisclosed and total income, including undisclosed income, is justified. And then the reference to various sections mark the absence of 144B and C. Therefore, no DRP and no that virtual assessment, faceless assessment as well. In fact, the law is subsection C itself says that 144C is excluded. Proviso is interesting. Proviso says, what is the proviso? It's proviso says that for the purpose of 158 BD, namely a third party offshoot of a search where some material, etc., is relating to a third person who is not search otherwise. For 158 BD, the definition of block will remain the same. Under the old scheme, more particularly under 158 ABC scheme, there was a debate as to what is the definition of the period of 6 years, how the same is to be counted, and what is the date of search. Because under the old scheme, the date of search for search person is the actual date of search, whereas in case of 153C, which is equivalent to 158 BD, the date of search was taken as the date on which the assessing officer of that third person would receive the material from the searched AO. Jasjit Singh, Supreme Court, has already held that search, the date of search in 153C would be the date on which the AO receives the material or records the satisfaction if that date is not available. Now the law says that both the dates of search would be identical. You cannot have different dates of search in order not to have any confusion, because ultimately the whole idea of a third party assessment is that based on the evidences in the case of a search person, you also frame the assessment in case of a third party for the same period. Now the law is explicit. We will discuss BD when we go there. But this is now the proviso in a way overrules the judgment of Jasjit Singh. However, I would not say it is an overruled Jasjit Singh judgment because it's a new scheme. We are having a new block assessment scheme, and therefore now that confusion is not there as to different dates of search for a search person and a third party. Clause 2 says that 143(1) would not apply, fine, and clause 3 says that before issuing the notice, the prior approval would be necessary. And therefore, one of the offshoots that I was discussing yesterday with Manoj Bhai was that is there any requirement for recording the satisfaction? My personal view is that before issuing the notice under 158 BC, there is no requirement of recording any satisfaction because this is automatic. And therefore, for what purpose the approval is required to be taken is for the purpose of issuing the notice, the approval is required to be taken. Earlier, it was automatic. Now they have put one more check and balance for the purpose of controlling the issuance of notice. However, nothing really turns on this because all the cases where 158 BC notices are required to be issued, all those are search cases. And there we know that the approval or no approval, it's not going to materially make a difference, provided, of course, one can find out that notices were issued without approval, and then that legal ground can be taken at a later stage. This is the provisions of 158 BC. Then go to BD. BD, earlier it was belong to, now it is belong to, pertain to, or relate to, or information contained therein relate to. It's a much wider term, and therefore BD can happen in the hands of any case, anyone who is even remotely connected. That would be person would be covered if at all any material, any seized document, any undisclosed income can be decided or can be derived from on the basis of the perusal of the material or the books of accounts or other documents or digital documents, then in hands of that person, the BD would take place automatically. The satisfaction, etc., is we have already gone through that. However, if you look at the scheme minutely, you would find that unlike 153C, where there were two satisfactions contemplated, kindly have a look at this BD case where the assessing officer is satisfied that any undisclosed income belong to or pertain to or relate to any person other than the person with respect to whom search was made under 132 or whose books of accounts or other documents or asset requisition of 132A, then any money, bullion, jewelry or valuable article, things, asset, expenditure, books of accounts, other documents, any information contained therein, seized, requisition shall be handed over to the assessing officer having jurisdiction over such other person, and that assessing officer shall proceed under 158 BC against such other person, and provisions of this chapter shall apply. So therefore, the satisfaction is of the assessing officer. Till the date of satisfaction, it is always the search AO who has to record the satisfaction. Once that satisfaction is recorded, unlike 153C, where the language is that whether that material has a bearing on the determination of total income of the third party, there is no such thing which is coming out. However, under the old law, this aspect is well defined, and there are judgments to the effect as regards the satisfaction being recorded by various assessing officers, namely both the AO of the search person as well as the third party. We can rely on those judgments. One glaring thing which is coming out from this is that Parliament was so conscious of the earlier mistakes, and they were all worried that we want to create a scheme which creates less litigation. Despite having that noble object in mind, they have not defined what is the time limit for issuance of BD. There is no time limit again which is prescribed, and we have seen in the previous avatar of block as well as 153C that this was a debated issue. Then what is the time limit which is required to be prescribed for 158 BD? There is no such time limit which is prescribed for 158 BD. However, the outer limit for framing the assessment is already there because 158 BD induces 158 BC, and BC time limit is already prescribed. That would take me to the next 158 BE. BE is a time limit wherein ordinarily 12 months time which is given to the AO to frame the assessment from the conclusion of the search. Here again, Parliament has taken into consideration the conclusion. Here they not say the initiation, because this is would otherwise would have curtailed the time. So here they have rightly started the computation of limitation from the end of the search. Proviso says that they get additional 6 months to receive the material from the first proviso says that for TP it is additional 12 months. Subsection 2 says that while computing the limitation of 12 months from the end of the last execution of the last of the authorization, you will have to exclude 6 months, namely 180 days, which might be taken by the investigation wing to hand over all the seized material to the concerned assessing officer. So this 6 months are effectively adding to the 12 months period. So total in all, the revenue has 18 months to frame the assessment. 6 months for the purpose of handing over the seized material, etc. after the appraisal is done by the search party. However, this is common for both requisition as well as search, and that is going to create a problem because our experience, my experience personally, is that whenever there is a requisition from ED or CBI, they don't hand over the material for a huge time. 6 months is nothing. And therefore, in that view of the matter, probably for requisition, the outer limit of 18 months, 6 plus 12, is going to create a problem. And in times to come, probably we will see that many assessments are getting time barred because they have not received the material from ED and CBI to initiate appropriate action under 132A. Then again, for BD, it is 12 months. Whenever there is a reference to TP, additional 12 months are provided. For BD, it is again 12 months from the date end of the month in which BC is issued. Because BD is a process which is only for the purpose of recording the satisfaction. Moment BD is recorded, you go to BC for the purpose of framing the assessment. And as I stated, TP means additional 12 months. Exclusion part is more or less the same whenever the courts have stayed the proceedings or special audit or valuation reference, etc. All those time is required to be excluded for the purpose of computing the limitation, which is more or less the same as in the old scheme. BF is again 234 ABC and penalty under 270 capital A is not leviable. Earlier it was 271. Now obviously those years are out. Therefore 270 capital A. And 158 BFA. BFA is basically interest and penalty, levy of interest and penalty. If you do not file your return of income or if you file belated return, then 1.5% per month from the date of last of the last date by which you are obliged to file the return of income under BC till the framing of the assessment, you will have to pay 1.5% interest. Penalty under BFA 2 is 50% of the income of the tax leviable in respect of the undisclosed income. So if the tax is leviable at 60%, then penalty is leviable at 50% of the tax so leviable. So additional 30% is going to be levied by way of penalty, assuming that the rate is 60%, because 113 says as of now 60%. Then again, certain sections are excluded, 271 AAD, 271D, DA and E, all this cash transaction and all those penalties are excluded, which is very logical because we are even otherwise computing the block income. Then comes BG. BG is competent authority. Then we find that deputy commissioner or assistant commissioner or deputy director or assistant director is the case. Maybe we do not have any officer lower than this category. And therefore, those ITOs are not considered. All the IRS, they probably begin by this. So lowest category officer is going to frame your block assessment with the approval again of the second in rank. All those principal commissioner, principal chief commissioner, they are all kept outside the purview of this sanction because they are too busy running the nation. Then we have 158 BH. BH is application, save otherwise is identical. All other provisions of the Act would apply to the block assessment scheme as well. BI chapter not to apply, that cutoff date is after 1st September 2024, it will apply. Now comes, there are couple of issues which we'll discuss and then we'll open the house for question answers. Probably in next 5 to 7 minutes, we'll do that. The first issue which comes to my mind is what is the applicability of Abhisar Bildware? Abhisar, we are all aware that Supreme Court laid down, and that also in a confused manner, that whether the search assessment or search induced assessment of 153A is only for the purpose of computing the income based on the search material, or there we can combine both the assessments together because it is ultimately a single assessment for each of the year. The consensus, the settled law is that there are two categories of assessment. One is abated, another is unabated. The abated years, obviously, it's a regular cum search induced assessment, and therefore all kinds of additions could be made. Insofar as unabated years are concerned, it is purely induced by the search, and therefore what you can add is only what is found out during the course of the search. However, Supreme Court has created confusion this wise that in one paragraph they write that we agree with Kabul Chawla, Somya, and other lines of judgments, wherein the very categorical finding was that for all those unabated years, it's only the additions can be made only vis-a-vis the seized material, which is found out during the course of the search. However, in the concluding paragraph, paragraph 14, the court has noted that once an assessment is initiated under 153A, once a small seized material is found out, a small incriminating document is found out, then the entire assessment is at large, and there is no distinction between abated and unabated year, and all additions thereafter it is open to the revenue to make the additions as per law. Now, this is a contradiction. Probably at some stage courts will iron out this controversy. But today, what is the situation? My humble opinion is that under the new scheme also, because these are all the search-induced assessment, materially there is no much change in the language of 153A vis-a-vis 158BB, that what the whole purpose of this assessment is, maybe it's a combined exercise whereby you compute the income of the block period regular income as well as the undisclosed income. However, insofar as the unabated years are concerned, the law remains the same, and therefore once unabated year, if there is no seized material, no addition can be made which are of a regular addition in nature. You cannot make GP addition in a search matter where there is no seized material for the year, obviously, which is unabated. For abated years, of course, it's a regular search assessment, and therefore any addition which is otherwise permissible under the law can be made. Chapter 6, deductions, exemptions, and other incentives. Again, there is absolutely no prohibition per se, and there is no indication that you will get it. But supposing in case if I am searched, and during the course of the search, if they find out that there is a undisclosed income of a unit which is SEZ unit, and I'm otherwise entitled for 10 AA exemption for that year, can I claim that exemption as an additional claim? My humble view is that we have judgments under the block assessment scheme. There are a large number of judgments that the whole idea is to compute the income. The argument of the department is that, sir, this is not a provision which is for your benefit, and therefore Sun Engineering, etc., those line of judgment, they would argue that you can't claim any exemption. However, the settled law, or even after explaining Sun, etc., the courts have taken a view that the whole idea is to compute the correct income, and for the purpose of computing the correct income, all deduction, exemptions, and incentives are required to be taken into consideration. I can understand that if the situation is that any disclosed income, I forgot to claim an incentive or a deduction, and I'm raising that claim so as to decrease my disclosed income even as per the original return of income, probably that is not permissible. However, if undisclosed income is found out and that undisclosed income is entitled for Chapter 6 a deduction, or for that matter, any exemption or incentives, I am certainly entitled. The third issue, which is very interesting, is what would be the situation vis-a-vis 115 BBE and 158 BA read with 113. I think someone's mic is open. Okay. 115 BBE is a section where all those dimmed additions are taxed at the rate of 60% plus surcharge plus some penalty, etc. Effectively 60 plus 15, 75 plus a couple of percentages here and there, and 6% of penalty, taking it to almost 83% and plus. However, under the search provisions 158 BA read with 113, it is only 60%. As I mentioned earlier, there is no surcharge which is contemplated under the scheme. And if you read 113 minutely, you would even realize that it is not a surcharge which is otherwise you would find appended to various slabs of individuals given under the Finance Act, because they have deleted the reference to individual year also from the purview of, and therefore even if you have to pick up the surcharge which is, let's say, there in an individual having income in excess of 5 crore of rupees, 37% surcharge is there under 2024 Finance Act. That goes with a particular year. Now the reference to particular year is taken out by specifically deleting 113 proviso. So therefore, the only conclusion is 113 as of today does not have any surcharge. Now, if that is the situation, then what will be the computation mechanism? Because then I'm better off if I'm searched, because under the normal provision, 68 edition would have attracted 77%, 83% tax if I remove penalty, because penalty has a different connotation. If I add penalty, then 113 normal 60% rate plus 158 BFA2 penalty of 30% would take me to 90% almost, which is more than 115 BBE of 83%. But if let's say I have an option to file a return of income under 158 BC, and in the return of income itself, I say disclose this cash credit, then there is no question of penalty. If there is no penalty, because 158 BC I am incorporating this income, then I am being taxed only at the 60%. So probably this also needs some clarity, because that cannot be a situation whereby a search person is better off than a normal SSE. And you cannot have a charging mechanism which is more than the search mechanism. Then the role of presumption, that can extrapolation be done, because if during the search, supposing 1 year, there is a material which is found out that a particular lawyer is accepting fees from his client at the rate of 50%. Every time there is a bill, he takes 50% in cash and 50% in check. If that modus is found out only for 1 year, can there be a presumption for earlier 5 years of the block period? Again, the answer is there are judgments to the effect that there is no role for presumption in a block assessment, because it is an assessment based on evidences and not on presumptions. And then other implementation issues, probably time will tell us that what are those issues. We are again pulling our socks for the huge litigation which is coming in our way. For that, we are grateful to Honorable the FM and the Parliament, but then that is not the kind of litigation which one would desire, because this is a non-predictive litigation. We all wish that we have certainty rather than uncertainty in the form of huge litigation. But I expect that there is going to be a difficult time in implementing the new schemes because of all this discrepancies. With this, my part is over. I can take the questions now. If Manoj Bhai can read out the questions.
Sir. Thank you, sir. Thanks for such a lovely and I can say excellent deliberation. It clears so many doubts about the search assessments. So I think everyone here must have been benefited.
Yeah.
And now let me take the questions.
Sir,
can you
there are
please
many
recite the
questions
case
come
law of
here.
Madras High Court?
Can we share the questions on the screen so that everyone would know, and we don't have to read out, then one by one we can take up.
Yeah, Manoj Bhai, all the questions are in the Q&A box. Please take them the
Q&A box. Okay,
Yes,
the
sir.
ones which you have shared with me, someone has shared the PDF of questions with me.
Yes, sir. That's a different one, sir. That's a
Okay.
different one.
Okay.
And these are all. Sir, can you open question answer Q&A box?
Okay, let me see question answer box.
Or should I read out?
Should I open and share? Try to share.
Yes, please do that.
Yeah.
I have opened. Can you see that?
No, sir.
Sir,
But you
before
can.
we start on the question answer, sir, I have some issue on the issue of the 158 BD here. Can we discuss that part here?
So can you see my screen?
Yes, we can.
No, screen is where the question, please. Ma'am, please start the
Yeah.
question.
Yeah. So the first question is, Finance Act 2024 has reduced the time limit for reassessment notice under Section 149(2), wherein no notice under Section 148 can be issued for financial year 17-18 or earlier years. Whether in such cases new limitation under Section 149(2) shall apply, and no new notice can be issued after September 1, 2024 for financial year 17-18 or earlier years.
Appears to be, we have a judgment of, in fact, Richard Ellis of Delhi High Court, wherein the view that is taken is that whenever a limitation has already expired, a new provision cannot revive that limitation. However, after Rajiv Bansal, and more particularly recently, even Delhi High Court, Justice Verma's judgment, where they have considered this aspect, and a bunch of petitions were dismissed on this ground. My personal view is also that search being a special provision, 6 years would get open, even if in earlier regime only 5 years could have been open, and therefore the one of the year could have one SSE could have claimed that year has become time barred. probably looking to the present legal scenario, that argument may or may not be valid, but most probably that argument may not survive the scrutiny of the court.
Okay.
Madam, we are not able to see the screen, your screen. Can you please reshare it here?
I'll do that, sir. I'll do that.
Because many of the participants are not able to.
Yes, sir. Just
So you can read out the questions. Let us go one by one rather than,
But I'm just trying once more if it's
Okay.
possible.
Yes.
Richa, you try. Meantime, let me read the questions. Okay.
No,
And you can try meantime.
there's a problem in the screen sharing here. It is not
Yeah.
getting here.
I
You
In the
can read out.
absence of information in terms of transfer of case record from A of the such person to the A of the non-such person, what should be the date considered for calculation of period of 6 assessment year and 10 assessment year as referred in section 153C, read with section 53A and 149 of the Act?
if that date of actual transfer of material is not available, the date of satisfaction can be taken. That again, Justice Verma's judgment, Delhi High Court, Ujjal
Yes, sir.
or something like that, that is there directly on the issue. Wherein again, large number of matters, the date was not available. And court has taken a view that if you can replace the date with satisfaction date.
Sir. Example again, there's a one.
I think now I can see the question answers as well. I'll point out. Okay. One is we have already dealt with Taruna Jain's question, right?
Yes, sir.
Okay.
And then again, Taruna Jain question
Okay.
with an example.
Oh,
Search was initiated.
asking questions. There are a large number of questions by her as well. All right. Since in this example, notice are issued to Y, who is not a search person, and so, whether all the notices are valid in law, kindly explain with difference to the provisions of the Act and legal precedent thereof, substantiating the said response, if any. I don't understand what is the question because
I think the example is above, then questions are there. First of example, search was
initiated at the business premise of company on so and so. Y is the director, shareholder of the said company. Notice under 148 was issued to Y on 31st March 24 for 14, 15, 17, 18, 18, 19 based on the documents found during the course of the search at the premise of YX. Since in this example, notice are issued to Y, who is a known search for 14, 15, 17, 18, 18, 19, whether all the said notices are valid in law. It would depend whether the material is available or no, because 148 now under the new scheme, it is automatic. Automatic is this wise. Explanation 2 to 148 small Roman 4 says that the moment there is the material which relate to, pertain to, or any documents contain the information which is relating to an SSC, the notice would be automatic. Once you receive the notice, you can ask for the satisfaction. And if you receive the satisfaction and if you find that that satisfaction is not proper, you can file your objections and AO can deal with that objection. If you believe that there is no connection between the material and the reopening, you can always challenge it in the court of law. How is the time limit of 6 years preceding AY in which question is made and 10 years from end of AY in which requisition is made is to be calculated? Both are having a different mechanism. 6 years immediately preceding the search years, whereas 10 years is you count from the end of the previous year in which search is carried out. So there is a difference between the two, beautifully explained by originally by Madras High Court, Rafuddin's case, and thereafter by Delhi High Court recently. There is a different mechanism. 6 years immediately preceding the search. So 6 years mechanism is immediately preceding the year in which search takes place. 10 years is from the end of the year in which search takes place.
That has also been dealt in the recent judgment of Delhi High Court, sir.
Yes, Justice Yashwant Verma's judgment, right?
Yes, Yashwant Verma's judgment.
General and the judgments are there.
In information in terms of transfer of cases, case records from AO of the search person to AO of the non-search person, what would be the date considered for calculation of period of 6 years? That date is as per Jagjit Singh's judgment, and that date is the day on which transfer takes place or the date of recording of the satisfaction. How is the limit of rupee 50 lakhs to be calculated in the context of expression in relation and in the relevant AY or in aggregate of the relevant? The question itself gives the answer that in the relevant AY or aggregate in the relevant AY. So either ways, if it is singularly or cumulatively, if it exceeds 50 lakhs, then you go out. For the purpose of calculating the limit of 50 lakhs in the relevant assessment year or in aggregate in the relevant AY, which falls beyond 6 years but not later than 10 years, which is 4 years. In fact, this is again explained in Indian National Congress judgment of Delhi High Court. You can refer to that judgment. This question is answered. They say that it has to be calculated cumulatively. Though in that judgment, it was individually also, it was exceeding 50 lakhs of rupees. Indian National Congress is answer to 4. 5, as per the section 153A, the AO can issue notice for assessment reassessment when the document in possession of the AO reveals that the income represented in the form of asset as escape passive. Will the digital evidence in the form of Excel sheet containing alleged accommodation entries or alleged hawala transaction be treated as an asset? No, it will be a book entry. You read the definition of book entry. There are 3 items: asset, book entry, and expenditure with relation to an event or an occasion. So you will be covered in the book entry, because book entry is a larger term, and then Excel sheet, etc., would be covered under there.
Sir, books will not be books which are bound and which are, as it's a loose sheet. Excel is a loose sheet. It's not a part of the book.
Excel digital evidences in the form of an Excel sheet. If Excel sheet is not forming part of the our regular, because ultimately, look, accommodation entry presupposes that you have credited in the books. Otherwise, what is the fun of taking accommodation entry? Accommodation entry, the very premise is that it has to be recorded in the books. Otherwise, why do you take entry? It is a cash transaction then.
Yes.
So anyways, but then assuming that is not there, then in the purely, if we go by the asset definition, there are 7 categories of asset which are contemplated therein. And admittedly, accommodation entry is a liability. Look, when you take an entry from someone, it does not become your asset. It is a liability. Because on that first principle, it will never be forming part of asset. However, in order to remove this, there is a law which is amended 149 with effect from 1/4/22. And then there are other forms of entries, expenditure and asset. All 3 are introduced therein. Next. What documents details should be checked? The Panchanama with respect to seizure of digital document Excel file, WhatsApp message from the laptop so-and-so is in compliance with digital investigation CBDT. You can go to Information Technologies Act, and section 65 thereof can come to your rescue. There is a certification process whereby you can get an evidence certified by the proper authority under section 65. Question
65B, sir.
65B of the Indian Evidence Act will also come into place.
Yes. And then question 7, under what circumstances can WhatsApp chat be considered as evidence by AO for the purpose of proceedings, and they are limitation and no rider? It is the same answer, 65B, unless it is certified.
Sir, just can you give a little bit brief detail on 65B?
Sir, what is 65B is basically the authenticity. I can record anybody's number in my WhatsApp. Supposing I record your number as not as Manoj Bhai, but as Income Tax Principal Chief Commissioner, and I start doing the WhatsApp chat with you. Based on that, if I'm searched and that WhatsApp chat is there, then that WhatsApp chat, what is the authenticity? You may write anybody's name, you may write anybody's mobile number, and what is the mechanism whereby we can check whether the messages have actually originated from one number and ended on another number. For the purpose of overcoming that difficulty, now we have a mechanism whereby one can certify that yes, this message has originated from this number and it has ultimately reached or delivered to this number.
Sir, so would we ask the certificate? In fact, in one of the searches which I am handling, I through an RTI asked for a certificate. Under 60. In one of the search case I am handling through RTI, asked for a certificate under section 65B from the income tax officer.
Right.
So you are relying on the pen drive.
Right.
They provide me the 65B certificate.
Right.
Everything is genuine and we are not going for that. And they did not provide me.
Then that is a ground which you can take. Either you can straightway challenge this before the court of law, or use it as for the appellate proceedings, that this chat goes out of the evidence box.
Thank you, sir.
Yes. Then question by anonymous attendee. Does 115BB result in multiple counting of income? Yes, we all have to see whether it amounts to multiple counting of income or no. But it is an amalgam of normal income and undisclosed income. Therefore, there is bound to be multiplicity. Supposing if a particular item I disclose in my return of income, supposing I say that my income is 1 crore rupee, I disclose that. The return of income, when it is assessed, I say that it's not 1 crore, it's 1.5 crore. I accept that addition. I accept it, and ultimately I do not file any appeal, etc. When at the time of filing of 158 BC return, I go with this 1.5 crore because that is what is accepted by me. So then it is going to be 1.5, 158 BC, then my assessed income 1.5, and then my return income 1 crore. Ultimately, this would result in a multiplicity because what is again going to be taken out from there is 1 crore of my return and 1.5 crore of my SS income. So what remains is 158 BC, 1.5 crore. But there is no mechanism whereby they can compare my old return and the new return and they can initiate the fresh penalty, assuming that I was not earlier exposed to penalty when I accepted the additional income in my assessment. So all these issues are going to crop up and this will again create confusion. Again, Taruna Jain is there. In absence of information in terms of transfer of cash records from AO of the search person to AO of the non-search person, what would be the date considered for calculation the period of 6 year tenure as referred to in 158 BC? I think we have already done this. It's a date of satisfaction or date of handing over of the material as per Jasjit Singh's order of the Supreme Court. In such cases, what is view on applicability of SS and D? It's already excluded. Block assessments, I have read out that those operation of 271 D, E, etc. is already taken out. So that is there, they are not applicable. Sir, under what section will penalty be levied for search assessment prior to September 24? Will it be under 270A? Is there any waiver availability? 270A is not applicable to block assessment, search assessment. Prior to search, prior to 270, under the old scheme, 271 was very much applicable, and there was no mechanism whereby you can claim immunity unless, of course, you fall under 270 AA. 270 AA says that if you accept the income as determined by the AO, do not file the appeal, and within 30 days pay taxes, etc., and then you can claim the immunity. However, the catch is that that is available only for underreporting and not for misreporting. So if your case falls under underreporting, you can claim immunity. If it falls under misreporting, and many a times my experience is the revenue is obsessed with misreporting. So every case falls under misreporting, and therefore I do not know 270 AA whether that can be available to you. But if you are lucky, then 270 AA is an immunity. Next is I have shared a PDF via email. Please also open that for discussion. I have not received. If anyone has that.
Sir, I have sent you, na? I have sent you that one.
Oh, that will be at least in my WhatsApp. I can't open it now.
Sir, it is already covered, sir. Maximum questions have been
Already
Some
covered.
question covers.
Let's go ahead with this. As per the Abhishar Buildware, sir has told that in case of unabated assessment, no addition without search material. However, in the block assessment, there is no individual identity of the assessment here as it is a whole block. Then how it would be possible? It will be for individual year, the income is required to be computed. And ultimately, those income would be added because otherwise there is even earlier returns also are not available for the block period. Earlier assessments are also not available for the block period. So any reference is you have to assume that for each year the income would become, because there could be large number of addition. One is for 1 year, another is for second year. So everything would be computed. It is only for the purpose of levying the tax and passing the final demand notice. They have clubbed this as a block assessment. And therefore you can always apply, Abhisar, whether clause 1 to 158 BB includes original return of income plus SS income plus new disclosed income. If yes, it results in dual computation under 158B. But it is also taken out from clause in clause 5. Your original income, assessed income, these two are taken out while computing the income under clause 5. So you go to
First they have added, and after that they have deducted, sir.
they remove it. Yes, you are right. Can a issue like non-deduction of TDS and so disallowance under 40A1A can be said as incriminating material in view of Abhisar Buildware? I think it's not, subject to again what is found out during the course of the search. If you find out that during the course of the search there is a noting which says that do not deduct TDS and that's why we want to keep this transaction as a secret, etc., then probably you may end up not getting the benefit. If there is nothing which is found out, it is simply comparison of your 26 AS and other material, and based on that if there is an allegation, then probably you are right. Then we can claim benefit of abhisar. Can you repeat the judgment? I do not know which judgment. Yashwant Verma's judgment. Ma'am, go log into Taxman and try to find out. It's a 2024 judgment. Give the section reference and you will find that judgment. There are large number of judgment passed by Justice Verma. You are fortunate. In fact, he is relentlessly passing the orders, and there are large number of them. I understand your difficulty, but if you can give me the specific reference, if I remember the title, I'll tell you. Can you please open the PDF I have shared via email, please? We have already covered, na, Prakash bhai?
Yes, sir. We have covered all the questions.
On search assessment, where penalty is levied under capital A, is there any way of waiver of penalty?
Again, sir.
You have dealt with, ho gaya na ye?
Yes, ho gaya, sir.
Regular addition over and above undisclosed income determined on the basis of incriminating material under 158 BB 15 would attract 60% under 113 or normal rate of whether regular addition over and above the undisclosed income. Look, whatever that remains after this addition and subtraction would be taxed at the rate of 60%. Now, it could be that according to you, it could be a regular income. According to the revenue, it could be an incriminating income, because that is not what is coming out from the reading of the scheme. You BC return and whatever is the income which is decided by the AO would ultimately survive. And whatever is the final figure of block assessment, everything would be taxed under the rate of 60%. Search commenced on company X on 21st October 24 and last authorization is on 10th January 25. The SSC could not file its ROI for 23-24 under section 139, due date of which was 31st October 24. Will the return for financial will be taxed at 6? You file the return now. I just discussed that during my presentation only, that there is no such embargo. You can file the return of income normally. If it all, I think you have already, we are already in January 25. So 31st December probably was under 139.4 also 31st December was the last date. So probably that is also gone. So now I do not know under what section. You can also try 130.
We have 4-5 days, sir, because it has been extended for 15th January, sir.
15 January. So
Yes.
you can do it by virtue of that Bombay High Court judgment. But isn't it only for those SSAs or it is for all the SSAs?
I think that it was for all the SSA. I think that.
And if I do not know, but if at all that is the situation, you can file it now. Or you can also file under 139(8) and 8A if the law permits, because again,
It was for individual assessees only, not for the
Okay, fine.
resident individuals.
Right. Okay. Whether the concept of incriminating material is done away under the new law in relation to unabated proceedings, I have discussed this. Incriminating material still remains, and therefore we can always apply abhishar. Hello, sir. Can you tell that suppose if a search is carried out in the case of a third party based on information seized, in case of a third party case of an SSC is reopened, so the notice under 148 should be issued to the SSC or notice under 153C should be issued. If you have to look at the reasons. If the satisfaction or 148 AD order, if at all that order is passed, if it is purely based on the seized reference to only seized material, then probably C would there. If it is an old search, because you are referring to 153C and 148 together, therefore I presume that this is an old search where C was an option. Therefore, search prior to 31st March 21. Then you look at the reasons and find out if reasons are purely based on seized material, you can argue that only C can happen and 148 cannot happen. But then the problem is that if you are going for C, then you are exposing yourself to 6 years and you will have to be prepared to argue the matter even on C as well.
नहीं सर, इसमें डेवलपमेंट हुआ है. There is a judgment of Delhi High Court on Naman Gupta.
वो ठीक है. यदि अब वो हमारे गुजरात में मैटर हर्ड है, ऑर्डर इज अवेटेड एंड गुजरात हाई कोर्ट हैज हर्ड द मैटर ऑन अ पॉजिटिव नोट. They are of the view that 153C is the only section which can be invoked and 148 is not. They are differing from Navin Gupta.
Yes.
So it's a hot field. Let us wait for the final. It is Supreme. So let us wait for the outcome. But then for the time being, you can take it. But then my flip side is you are exposing yourself to C, because C, there is no limitation. Even if you go by Kolkata, Knitwear and those lines of judgment, reasonable time, if the court excludes the time which is taken for the purpose of pursuing a wrong remedy, namely 148, then you are again in for a soup and you can face 153C action. Provided, of course, you can prove that you are not even falling under 153C as well. Sir, as we all know, if a compromising statement is recorded in search, the same is retracted by means of an affidavit. I recently heard of a judgment that even if an affidavit is filed against the statement, won't automatically become void and can be used as a valid evidence. Can you guide on the same? Look, the law is, again, it's a very circumstantial law, because merely filing of an affidavit is not important. What are the timings of filing of that affidavit and what are the contents of that affidavit? That is important. And more particularly, if you have filed the affidavit before the assessment is framed, and if you can demonstrate before the AO that what was stated in the statement is otherwise wrong by adducing evidences on record, then probably you have a case. If the assessing officer proves to the contrary that statement was correct and he has some additional evidence to substantiate the statement which you have subsequently retracted, probably you do not have a case. So therefore, mere filing of an affidavit or absence thereof would not alter the situation either way. Even timing of the affidavit is also very important, so you'll have to keep that in mind. Question 8 by Taruna Jain: is it advisable to make an application to the AO for utilizing the cash seized during the course of search against the liability, if any, on completion of the reassessment process? Always advisable, because he is not going to go cash, and therefore might as well be deposited into PD account. It is known as public deposit account, so that your interest stops running and you start getting the credit for that money from the day on which you make that request. Sir, will WhatsApp chat not covered under Article 20 being self-incriminating? WhatsApp chat not covered under Article. No, WhatsApp chat is of evidence. Even if it is self-incriminatory, it can be used for the purpose of framing the assets. There is some example or some income is given. I'm not going to compute that, so we can skip that question. Some income is there and someone wants an answer, then what would be the... I have not done it since ages, so I'll not be in a position to do it. Section 148, notice issued if income per year above 50 lakhs or 6 years total rupees above. This is already answered. For the purpose of calculating the limit of 50 lakhs, the period of 4 years beyond 6 years, but not larger than 10 years, is to be calculated from the end of the year or preceding year. We have already discussed that. Can I get contact details? You can get in touch with Prakash Bhai. He'll answer your questions. Based on the digital evidences, Excel sheet found during the search, can AO issue 148 since it does not fall under BOA, books of accounts or asset as per 153A of the Finance Act 2020. Digital evidences are they are always part of the evidences, and you can't say that even if they are not falling under books of accounts or asset, the 148 can be issued for the simple reason that if it is you want to take shelter of 149(1)(b), then you have to make sure that you are not falling either under the asset, nor under the books of accounts, nor under an expenditure clause. If you are not falling under any of these three, then unless we look at the nature of the digital evidences, there cannot be a generalized exclusion. Excel sheet covering what entries, we do not know. Therefore, if it is, let's say Excel sheet is there, and if it is the entry of a loans and advance account, and then there are loans which are there, or there are shares which you have invested out of your undisclosed income, and the details of those shares are there in the Excel sheet, then it will certainly fall within the definition of asset. So what we'll have to do is look through the Excel sheet and find out whether it falls in any of these exception clause or not.
Sir, there are a few questions on the chat box also. Chat box in the middle, this one's here.
I think most of the are repetitive one, except few one. Let me come out.
Just can you read the Manoj Bhai chat box here?
Yeah, let me see which are new one. Some are repetitive in nature.
Like Akash Bhatt has said that whether it will be a single assessment order for the block assessment year or a separate order for different
Sir,
years.
almost same questions are there.
I don't see any. Let us see.
Tushar bhai can see all these questions here in the Q&A box, sir.
Yes, yes. No, many a times I find them repetitive. You may not find it repetitive. So if you tell me, I'll discuss that.
If you go from the first one.
हाँ करना है आप बताइए. You tell me. First one, will the
No, that is this one here. Sir, I have a question. Samriddhi Goswami, take example of why he is a director and the shareholder.
प्रकाश जी हो चुका है.
Okay, Samriddhi, advocate Samriddhi. Okay,
yeah.
sir, I have a question. Take example of Mr. Y. He is a director shareholder in company X. Notice under 148 issued to Mr. Y based on the documents found during the course of search at premises of company X. Is the notice valid as it was issued to a known search person? Under what section? 148 notice is issued. Then obviously that explanation 4 to explanation 2 to 148 item small Roman 4 would cover this situation.
And after that, Ayush Khera. Ayush
खेड़ा का तो
whether the concept of incriminating material is done away with under the new provisions of the search. That is what we discussed. That in what
yes,
is
we
it?
have discussed it.
Yes, yes.
Under what section? We have already discussed, sir, on search assessment 278. Akash Bhatt, sir, is there.
Akash Bhatt. Okay, let me see. Where is Akash Bhatt? Akash Bhatt last. Okay, sir, whether there would be a single assessment order for the block assessment years and a separate order for different year. No, there will be a single assessment year, but that assessment order will have computation for each year separately. Ultimately, everything would be summed up together so that we have to prefer only one appeal. And against that, again, if before CID appeal, if I succeed in some, lose in some, then again it will converted into 2 more appeals before the tribunal. So that multiplicity of litigation is avoided. That is what the whole idea appears to be. There is no PPT. Someone is asking. These are all Word files which I have prepared sitting in the courtrooms. So these are all rough files only for the comparison of the sections.
Sir, after that, Mahima Panchal has said, sir.
Okay, all right. Literal interpretation of definition of block period. That is previous years relevant to 6 assessment years preceding the previous year in which search was initiated. If search conducted on 1/11/24, then previous year is 24/25. 6 assessment preceding previous year 24/20 would be all right. And it also includes year of search. Previous year 24/25, that is 25/26. So whether 24/25 will be included in the block or no. 24/25 is the year during which search is taking place. So that year from 1st April till 1/11/24 would be considered as a part of block. And from 2nd 11 onward, it will be treated as a normal year.
So we have almost covered, sir, whatever the question was there.
Right. Okay, I don't see any new questions.
Sir, you have the question, I think 158 BD.
Yeah, sir, one people has sent me the question through WhatsApp to me here. Okay. On the 158 BD, sir, one question they are raising. He's saying that where the assessing officer is satisfied that any undisclosed person belongs to a pertains to this one, sir. If Mr. A is getting searched, so the AO of A is getting satisfaction that Mr. B has some undisclosed income. The AO of B is not taking the satisfaction. AO of A is taking the satisfaction. By way of reading, it looks like, sir.
Right.
So the question arises how the AO of Mr. A can satisfy that B has escaped certain income.
No, that kindly look at the language again.
Yeah, please, sir.
BD, look at the language of 158 BD.
Yes, sir. Where the assessing officer is satisfied.
Read. Please.
Where the assessing officer is satisfied that any undisclosed income belongs to or pertains to or relates to any person other than the person with respect to whom the search has been made under 132. This means A has been searched, but assessing officer A is finding, AO is finding that this income, this is pertains to B.
Right.
And after that, he said that then these requisitions shall be handed over to assessing officer having jurisdiction over such other person and the other person shall proceed with the 158 BC.
Right.
So the point is that if Mr. A, if suppose that if I am being searched here, my assessing officer finds that some material belongs to Manojji, and he draw the satisfaction and he sends the material to Mr. AO of Manojji, and Manojji assessing officer, without having another satisfaction, he is sending the notice here. So the point that whether the two satisfaction which was required under the erstwhile regime, whether this is required or not. And the second issue is that how my AO can draw a satisfaction on the escapement or on the material which Manojji is pertaining, which is there, which is the escapement of Manojji here.
Therefore, to answer that, we compare both the sections, 158 BD under the erstwhile regime, 158 BD under the new regime. Both are identically worded. There is no change in the language of 158 BD at all, except belong to. Earlier it was belong to, now it is pertain to, relate to. To that extent, there is some change. Other than that, the whole nature of the section remains the same. Under the old section, there were judgments to the effect. In fact, right up to Manoj Agrawal's judgment of Supreme Court, wherein this satisfaction, etc., is discussed by the Supreme Court at a great length. The view that is that exercise of separate satisfaction is required to be carried out, because the first person of the AO of the search party will only decide the ownership of the document. Now, it's not even the ownership, it is only whether it is even remotely connected with a particular SSE or no. Once that exercise is taken off, then the seized material, etc., would be handed over to the person of the third party, namely the AO of the third party. That assessing officer has to, before issuing the notice under 158 BC, he has to follow the procedure. He has to correlate that material. Supposing in a given case, there is a undisclosed transaction on the floor of the stock market comes to light. Now, without checking the return of that third party, whether he has disclosed any capital gain in his hand or no, there cannot be a presumption that this material ultimately leads to some undisclosed income in the hands of that third party. And that is the reason why we'll have to follow the jurisprudence of the earlier regime, wherein this aspect was categorically clarified that we need satisfaction of two AOs. Unless that happens, you cannot have the jurisdiction to reopen. And probably...
Please, sir, please complete, sir. Please complete, sir.
Yes. And probably that was the reason why 150, before issuing 158 BC, there is a process for granting the approval. We were discussing yesterday, and we were of the view why this provision is there. That provision is there precisely to take care of situations like this, that whether the exercise of issuance of note, because notice is common, 158 BC notice is common, even for 158 BD also, the notices are required to be issued under BC only. And therefore, even courts, even under the old scheme also, courts have recognized this, that we need the satisfaction of both the authorities, namely both the AOs.
Surprisingly, sir, 153C, they go with the word belong to the document or jewelry belong to the third person. They did not go with the word that has a bearing on the income. And
Right.
that was for the AO of the other person to record that satisfaction.
That was only for the third party's AO who can record this satisfaction, that this is bearing on the computation of total income of the third party.
Yes. Thank you, Prakash, for what thanks.
Sir, for one issue, sir, if there is a provision that the SSC has to file the return here, in case in the return something has been omitted, he has not been able to file here, what is the remedy that is there? Because right now, as we know that Gorge is not being, does not permit the AO to consider something which has not been in the return. So what can be the remedy, sir?
I'll tell you immediately the citation of that judgment, which was yesterday. I told you that something is troubling me. And that judgment, I'll tell you. It's a judgment, Shriram Investments, 167 taxman.com 139. It's a 2024 167 taxman.com 139. That is a judgment where the view that is taken is that now even the tribunal does not have a right to direct the AO to take into consideration the fresh claim, which is filed without filing the revised return of income. However, as a saving grace, in the last paragraph, they noted that we are not commenting anything on the powers of the tribunal to entertain claim before it. So setting aside claim to the AO, Supreme Court said you can't do it. Tribunal itself can verify the claim and then do it. That is something where they are not commenting. So therefore, the life is much more difficult. Earlier, the consensus was that Goetze is thereafter explained in a series of judgments, including the Delhi High Court Jai, Parabolic, and all those judgments, wherein the view that is taken is that once you raise a claim before the appellate authority following National Thermal and Jute Corporation, they will send the matter back to the file of the AO for regularizing it. AO was not empowered because of Goetze. Now, Supreme Court in this judgment says that even AO cannot do it, neither tribunal can direct AO to do it. Only tribunal can do it under 254. So, we'll have to be extra careful in raising these additional claims.
Now,
Question by Saurabh. Prakash?
Yeah,
Sorry.
sorry.
Yeah.
I mean, this is a very interesting point brought about by Tushar ji. So the tribunal will act like an AO to examine the claim.
It's true.
tribunal will remand the matter.
What they do is, my reading is, what they will do is, they will in principle decide the issue. They may leave the computation again to the file of the AO. Computation is something which can be done. But then to simply say that AO to examine the admissibility of the claim or AO to process this claim is not something which is not going to be permissible.
And if it is a legal question, tribunal can well tell that this is the position of law. AO, please do the computation in accordance with this direction. But if it amounts to requires checking documents, doing verification, etc., how will they do it?
Then in case, look, Jute Corporation and even National Thermal also has that caveat that it's only legal claim where all the necessary facts are available, you can raise an additional fresh claim before the tribunal.
Right.
The moment you go into the factual claim, then even those judgments also will not help you.
Okay. Even though tribunal is final fact finding.
Right. Then also, because tribunal cannot check something which has not been processed by AO. It's only when the legal claim is there and all the necessary facts are available on record, the Supreme Court has said in that National Thermal judgment, tribunal can do it.
Sir, I have one question. As we were discussing the due date of return, which has not been extended 31st December, but in that question of the participant, can he file the updated return? Because that also allows, if you have missed to file the return previously, ITRU. So is that option?
He can always look. What I discussed was that there is a reference to 139.
Yeah.
Now, and the law does not say that returns which are filed prior to the search, only those returns would be taken into consideration. They say that any return which is filed under 139 would be taken into consideration. Addition and subtraction. So therefore, you can always say that I have filed the return of income post this search. Therefore, that return is required to be taken into consideration. What the law says is, Section 1 says 158 BB, subsection 1 says add it, and 5 says reduce it. So it will have no effect on total income. However, this income will not thereafter be treated as an undisclosed income because it is already forming part of your return income.
Okay.
However, interesting question was arise that whether it is what is preceding what, detection or declaration. So that question, someday someone will have to answer that, whether it is detection first and declaration after, or declaration first and detection thereafter. That question.
Yes, sir.
Yes.
And so the tax rate will be determined accordingly.
Accordingly, right.
Yeah.
So the issue of the compulsory honesty will come into the play here. It is the compulsion, is the honesty by compulsion, sir.
Indians are known for that. Honest only when it is compulsory.
In fact, to some extent, sir, amnesty. Pay 60%, relax.
I know. It is true.
In fact, sir, in the morning itself, I was discussing with my colleagues here that when the Puanmal was decided, it was on the issue of the 14 and 19.
Right.
The issue of the Article 21, which has been stressed in the case of the Puttuswamy matter, Puttuswamy, the right of privacy, and how the right of privacy will prevail after all this search and procedure here. And particularly, I was also discussing that that in the case of the election bond, Supreme Court has said the right of information is also a fundamental right here.
Right.
So right of information, right of privacy, all these two has to be looked into the new procedure of the Income Tax Act here. and how this law will be evolved, because the Puramal was on the 14 and 90 in 1971, long back.
Now, judgment of this Madras High Court, very beautifully explained, very beautifully written. You must read that judgment. They have covered all this. So it's a very interesting read as such.
Last, it is my turn to extend vote of thanks to our learned speaker on behalf of the Chamber of Tax Consultant Delhi chapter and on behalf of the whole Chamber of Tax Consultant. I'm really, really thankful to Tushar Bhai. You know that how we discuss this issue through the WhatsApp, and when I discussed this issue with Tushar Bhai was out of India, and when he came to India, he just called me that, okay, we can do some program here. And first we decided to do something in the month of December, but it was not getting materialized. Luckily, I thought that in the new year, the new topic with the new thought process, we will come and we will discuss this issue. And Tushar Bhai has rightly discussed all the provisions of the search and seizures here. And he has also discussed one important part. Although the Gujarat is a dry state, he has also discussed that Gujarat under the whiskey part, he has discussed that. So I was noting that part, that yes, this is getting the new year theme here, that yes, we can discuss this whiskey in Gujarat also. So we have discussed thoroughly all the provisions of the search and seizure. We have discussed what was the law behind and what are the new law, what are the nuances of the new law, how to go through the new law. And most important part is that our learned speaker has answered all the questions which was there in the chat box here. So my sincere thanks to you, sir. On behalf of Chamber, on behalf of the whole executive committee of the Chamber, on behalf of the whole Chamber of Tax Consultant, I best go for the thank to you, sir, for sparing your valuable time. And I know that you were busy in the whole day in the court here today. I was thinking that how Tushar Bhai will manage here. But thankfully, sir, that you have managed, and we all are being benefited with your immense knowledge, sir. And we look forward for this type of webinar in the near future also, sir.
With pleasure. Thank you very much.
Thank you very much, sir. Thank you. Thank you.